Hey guys, Zob here from OneGlassTrader.com, and in today's video I want to share with you a New Zealand dollar US dollar pinback pullback trade that I got alerted to using the price action indicator. So as you guys know, recently I've been looking at the pin bar on the OGT price action indicator, which again you can get for free. Just click the link inside the description, and I've been looking at trades that are going with the trend because I feel that's putting the odds more into my favor. So the pin bar I want to look at is this pin bar over here, which formed this morning. Unfortunately, I was still asleep, so I did not take this trade, but I thought it was a good trade to analyze using kind of the rules that I'm creating to see whether or not I would have taken this trade, and whether or not it's something that I should be looking at or refining my rules. So before I begin, let me just share with you my indicators that I've got on my chart. So obviously I've got the price action indicator. Again, it is set to just the pin bar setting because that's all I'm really interested in at the moment. I've got the Ichimoku indicator up, and I only really use that for the cloud to see where price is in relation to the cloud, and we'll go through that in a second. Again, we've also got the round numbers indicator, which I've downloaded from the MQL5 website, free indicator there. And then we have got three moving averages, the 20, 50 and 200 from memory, but we'll go through that in a second. And it is colored, so therefore it's based on slope. As you can see here, when the 20 starts going in a down direction, it turns from blue, which is kind of straight or non-trending, and then red where it's sloping downwards. So that's what I've got there. I've also got the ATR as well, which again I'll go through. There's a reason why I've got all these indicators up, and it's just really to me to identify the kind of structure and where I think price is going to go. I've also got a Fibonacci expansion on here, which again I'll go through inside a second. So for those of you who follow my stuff, I've been working with this working notepad file in terms of, rules or what to look at, whether or not I should qualify a pin bar or not. So as I said before, I'm only interested in pin bars that are forming to indicate the direction of the longer term trend. So if I look at these three over here, these are all counter trend trades because they're all going against the trend, even though bar this one, we did get a sell-off here, a sell-off here. So these are the pullbacks back into the moving averages. But this one here, because it's green, it's signaling it is a long signal, and these are the type of ones that I'm looking for. Now, I'll be honest, because I've got a lot of rules, a lot of things I look at. There aren't that many of them. So on my other machine where the indicator is running on where I get my alerts from, and it's also running my EA as well, I probably get about one or two a week, and even those one or two, I discount them quite quickly in terms of once I do the further analysis. So there's one or two that actually are in the direction of the main trend, but I qualify out due to market structure or the fib levels, round numbers, etc., etc. So the first rule I look at is that the 20, 50 and 200 EMA are in the correct order. So for a long trade, it needs to be closest to price 20, 50, 200, which it is. The 50 and 200 should be sloping, in this case up, or should be green, just to show that it is just a short-term pullback. So you can see if I zoom in slightly, it might not be that clear, that when the pin bar formed, the 20 is blue, so therefore it's non-trending or sloping straight, but the 50 and the 200 are both sloping up, so I'm quite comfortable with that. So from my perspective, that would have been a pass at the moment. Pin bar has touched the 50 EMA. Now, again, I'm still flirting around with this rule. So the pin bar has not touched the 50 EMA. However, it's not that far away from the 50 EMA. For me, it wouldn't have been a deal breaker at this point. But if we carry on looking at all the rules, you see in the general overall gist of it, which is why it's quite it's not that much of a big issue. It would have been perfect because then it gives you a resistance zone, or a price is as close to um, the 50, you're probably getting a better value, getting in at a cheaper price. So price above, below the cloud in the direction of the trend. So as you can see, we are above the cloud. So we're going long here. So price is above the cloud. Pin bar has touch or to be close to a round number. Now, and this is why I've got the round number indicator on. As you can see here, the 0.71500 level, price, rejected this level, and that for me is probably one of the key ones for those who've been following my pin bar videos. This is quite important to me that it has rejected it, and as you can see there, it has rejected that level quite nicely. So in terms of profit targets, I try to look for the Fibonacci expansion 61.8 level, and ideally I want the 61.8 level to be on or before the next round number level. Now, as you can see here, so I've drawn the Fibonacci expansion there. This is, again, it's all subjective. You could say that the high could be here or here, but I've gone with this is the upward momentum, and then this is the pullback here. And then the 60, as you can see, the 61.8 level is above the round number, which does raise a concern to me because this round number here could form as resistance, which you could argue has formed over here. So I wouldn't not take the trade. What I would have probably done is probably set my take profit target at this level over here. Even though, as you can see, price comfortably did get to the 61.8 level, I probably would have taken it here as long as my risk to reward was 1-to-1 or greater. If not, then I would have not taken this trade. I didn't take the trade anyway, but that would have been through my thought process if I was awake at the time. And next, probably the second biggest one for me after pin bar touching around number, being close to around number, is market structure. So we're in an uptrend, so we should be seeing higher highs and lower highs. So we've got higher high, higher high, higher high, and we've got lower low, well, lower low, lower low, lower high, lower high, lower high, lower high. So this pin bar is formed on a lower high. This is perfect textbook market structure, and this is what I really like about this trade, about this one here. So that would have been perfect for me. I would have really liked to see that one. And this is a new one that I'm speaking to a few traders about in terms of pin bar and my research, and something that I'm going to look to incorporate. Again, it probably wouldn't be the main factor, but it would be great if it did. Would be that the pin bar is bigger than is greater than the current ATR of 21 periods. So we have a look here at this bar. The ATR is 21.3 pips, and if I measure that, so it's thereabouts, 22 pips probably, so it just makes the 1-to-1. Again, that would have been good enough for me from that perspective. And yeah, so what I would have done is when this opened, depending on when I look at it, sometimes if everything was all good and price was going down, it wouldn't bother me. I would just get in the trade there. If price was, going up and above, I would take the trade there. If it was near about the open still, I would put a pending order above and then taking it from there. So again, when I say I'll do a pending order above, or I'll do a 50% retracement to get in at a better value, it really does depend on how long it takes me to get to the charts, because I could be out or I could be asleep and I woke up. So when I woke up, price was already about here, which in my view was too late, and I wouldn't get my risk to reward that I wanted. So I parked this trade there. So I'd rather be out the market than in the market. However, it was a good trade at the end of the day. So going back, would I've put my my take profit target at what I've got in this trade, if my take profit target was greater than a 1-to-1. So let's say I did do a pending order, and then we go over here. That's 32 point, let's call it 30 pips play worst case, and then my thing would have been 35. So, you know, would I have taken it? No, me, I probably would have, even though it's just less than a 1-to-1. I would have set this as the profit target. I wouldn't have put it at 61.8, even if it got there, because for me, from what I've seen so far in terms of my research, is that price will halt at this level, and it looks like that it did break through quite comfortably to this level anyway, but now it's starting to come back down and could close down at that level. No way would I've ever put it at 100. So that would have been my take profit target. So just wanted to do a quick video on that, just to let you know of a pin bar that I'm working on. So what I plan to do is share with you all pin bars that do form, even if they don't hit the criteria. I want to talk about it and why I wouldn't have taken it. And yeah, really hope you enjoyed this video. Like, share, subscribe, and I'll see you guys on the next video. Thank you.